Hello traders, it's Samurai Trader here. Welcome to today's session. We're going to be looking at trading CL again. We've got quite a following of members, 4 or 5 full-time professional oil traders in our membership now, and I estimate probably 40 to 50 day traders that are part-time to full-time also trading oil. So I've had quite a few questions come up about trading a T1, the T9, so I'm going to cover a few things along those lines, plus with the little projection tool, the TradeMaster 2 that I projected. Just want to show you a couple of things with that. That's progressing well. And first of all, we are going to be trading trading oil in the live trading room. So we'll be trading almost certainly the ES and oil, just because of the following and the scalping opportunities with oil. As we get underway, as always, we need to cover the disclaimer on understanding the risk. So please don't trade with money that you can't afford to lose, but you're all members. You've seen this on every recording that I run, so naturally you'd be taking all precautions. I'm going to recommend that you go to full screen, bottom right hand corner, because in a couple of moments we will be going and looking at some charts. Also, please have a pen and notebook handy. Hopefully I'm going to be coming up with some ideas for you that you can use. Now remember, the ideas that I cover here on CL will openly apply to FX, to stocks. It really doesn't matter what market you're trading. However, different setups I tend to find will work slightly differently, or even better I should say, on some markets, because I find, as an example, the T9 does not work quite as well, or as I'd say the statistics aren't quite as good on the NQ. Still good, really good, but the T9 works absolutely brilliantly on CL. So as always, go back and apply and back test at least 100 trades. Now with that being said too, just while I think of it, I've had a number of members email me in back testing on, say, using the MACD or using stochastics. There's nothing like live trading, traders, because when you back test, say looking at a MACD, when you're real-time trading, you've got it flickering and moving around, and it can give you entry signals, and on the next 1 or 2 candles it was no longer an entry signal. So there's nothing like back testing, yes, but verified, of course, then in a real market. Very, very important. So in the live room at this stage, very much, or almost certainly, we're going to be trading the ES and oil. So more on that over the next few weeks. Now, know thy personality. Not all markets are exactly the same. Now with the CL, it reminds me of a wild animal that is now a pet. Okay, it may be a pet, you may be able to cuddle it, pat it, and whatever, but you still never want to turn your back on it. And oil is very much like that. Now oil is a relatively new market for us to trade. That is, of course, most of you are aware I'm an NQ guy, trading FOREX and moving into NQ, and very much with our fund we're trading the ES, and we've been looking at with an EA, etc., in trading CL, and some very interesting things are coming out of that. So we've decided to launch the CL in the rooms, because we've got a real following with members and some professional traders that are making many thousands of dollars a week and doing very well out of CL. Let me get that right, CL. Now, but it has a certain personality. You've got to be very cautious, but there's a real place for it, and we're going to be having a look at some ideas there. This is something for you to think about, traders, and I'm not saying you're going to achieve this, but I know it's that you could. It's a possibility. Of course, we're all different, we all trade different, but this is something for you to think about. Now with CL, 4 11 tick net trades a day, that is 4 net trades after any losses, is worth $400 a day approximately after commissions, or 8 6 tick net trades a day is $400 a day. Now this is a real possibility in trading oil. Of course, there are certain times you want to trade it. From 6 or 7 a.m. through to 11:30 a.m. are your best trending times, and perhaps in the last 90 minutes or so. Go back and do your research. Have a look at using your anchor chart and your entry chart and making sure they line up. Now The best thing with oil is to wait for all the EMAs on your anchor chart and EC to line up, and even as Marcus, one of our Romanus trader, his name is, full-time professional trader, recommends using 3 time frames, and there's some real benefits and logic to that, so something for you to think about. But what happens with oil, and this is applicable to basically every market, every day you'll have the sweet spot. It's a matter of sitting on your hands and waiting for that sweet spot, and oil produces it every day. You'll see those sweet spots. Now this brings up the subject then, should you be counter trend trading? Let's just go back to this slide here for a moment. Let's talk about more scalping. 8 6-tick net trades a day is 400 a day. Now just as a quick count, on CL on Thursday there was T1s with the trend. I counted very quickly 32 for only 10 losses, and that's working on a risk-reward ratio of 1-to-1. So there were 32 with trend trades, with T1s with the trend, and 10 losses and 2 break-evens. So, and this is very quickly, without going back and showing you executed trades, this is just a quick count. What that brings up then is the logic, should you be counter trend trading on CL? I'm going to show you a few things in a moment. Now the T9 and T10s, they're a quasi counter trend trade, but you've got more of a confirmation that the trend is changing, right? But something, if you're looking at $200 to $400 a day per contract, and many of you are only after $100 a day, stick with the trend. There's a rule, it just works brilliantly on CL. Also, I tend to find with my own observations and with the work we're doing on CL now, is that by following the 34, the wild animal, where it takes off, if it generally takes off majority of the time in the direction of the trend, it tends to get the counter trend traders. And so stick with the trend traders. I just think with CL, it's just a much safer bet. So here, follow the gold, follow the 34 EMAs. So watch how most very fast moves are with the trend as more traders jump on, excluding news. Of course, you want to really watch and stay out of the market during the choppy times, and of course during red flags. But there's so many day traders scalping the market. When it takes off, it really takes off. So what time frames during the London session? Well, let's start with the Asian session leading into London. The 89 tick works really well up to a 144, and so the 89, so if you're going to have 3 time frames on your chart, 89 tick, 144 and 377. Leading into the New York session with the 233 as your entry, your anchor chart 610, and your 1597 as your 3rd time frame. Now if that's too fast, consider a 377 tick, 987. Now I tend to like to tuck my stop wherever possible under the closest swing high and swing low, and of course when you get up to a 377 of a high of a time frame, your stop generally is bigger because of course you've got more movement in a candle. So that's just something for you to think about. Okay, where are we here? What's next? All right, let's go to the charts now. So what we're looking at here, traders, is this is the 30th of the 11th. For my US colleagues, it's the day before, and this is leading into the Globex session. So the market closed, so this is effectively, if I remember correctly, Thursday morning my time, Wednesday evening. Now for the sake of what I show you here, I'm going to be ignoring any news announcements, anything else like that during the day. Now, and that's the thing to remember, you'll look at some fantastic moves, and even some of these, for an example. Let me just this point here, I don't want to put my pointer on here or my highlighter because I want to show you a couple of things that I need to use some other tools in a moment. But some of these moves, as much as this one was very tradable, and for a moment please ignore these dots, okay? Ignore those. They're on an indicator that we are still trialing. Is that you'll see some of these movements and they're not tradable because they move that quickly. They look fantastic in hindsight, so always something to consider. Now why we're here with the TradeMaster 2, which is the indicator put out by Trend Pro. I'm trialing it for Roy, and it's something that's looking very good, which we'll be using in the live room, and we'll be using it for projecting potential targets. Now, as you are aware, I'm a scalper. I'm in and out, get in, get out, get paid. However, in trailing your second contract, this tool is looking good. There's a disclaimer, it's looking good. Okay, we're doing a lot of work on it at the moment, and just to give you an idea here, as soon as I see a T1, I'm plotting this. So in this particular case, I'm waiting for a T1. I go to the top here and I plot it, and it tells me that if I take the bottom target here, it tells me there's a high probability price action will come down here. Okay, if I now plot it here, because I get a bounce on the 34, a traditional 89.34 bounce, it's telling me there's a very good chance that price will go as high as here. So we can see here for our first contract, we're in and out. If you're leaving your second one in, you've got a potential target of right up here. Now there is your whole day's profit already there. Now you may have actually got out here, you may have a rule that signals you to exit here, so we replot it here, and it's giving me a secondary target of right up here, which is, what's that, probably a good 15. Let me just tell you here, actually, let's go from the close here, 26. Let me just use the close of here, high 26, high 26. Well, there's 20 ticks in that move, $200 a contract. So this tool has potential, and it's nowhere near as effective when you have these sorts of runs here, these channels. Well, anything you want to be very cautious on, but we plot it here. It's telling me that potentially we've got a target of down here. It's telling me the other way, so I don't have a target, I don't have an entry, I should say. I'm going to continue to trade with the trend. Here it's giving me a target of here. If I click here, it's giving me a target way down here. So statistically, it's probably 75% accurate, I would say, but where I see the potential is a more mechanical way of having targets. Okay, now it's quite complicated how it works. Okay, so it works on B1, B2 points. It's a very complicated indicator, and I'm still, as I said, learning how to use it, but I really see that and I'm taking at extreme points. And by the way, where you see it plotting here, look at this here. This is how it would appear in real time, by the way. And so where it plotted, it picked that turning point within one tick. Here it ticked this one with it, hit this one, the bottom one here, within 4 or 5 ticks. If we go here, let's click on this one, look at this here, within this one, within 1 or 2 ticks. Quite amazing, isn't it? Up here. So perhaps you can see the potential, and here it was way down here. You've come down for your bounce, and this is where we're just looking at how we trade it with the EMA bounces, because it works brilliantly at extremes. Let me just go up here. Okay, where's that one telling me to go and trade to? Look at this here, right to the tick. And yes, traders, that is what it would have plotted in real time. So if I had plotted that there, it would have come up here. So perhaps you can see some potential with it. As I mentioned, though, I'm looking at, okay, here I plot it here and it's giving me a reversal, but we're trading with the trend. Let me just go here. Okay, once again, it's a false entry. We wouldn't have taken that one because we're still following the trend. There's no extreme, so I'm looking to take it at extremes. Now here we're getting a bit of an extreme here. I have got divergence, and by the way, it works very well when you've got a divergence trade, but we can see we've come down for our classic 34 bounce. So with it, what I like to see is these extremes like this is where we've got angulation. Now, as much as it was right up here, let me just plot a couple of these here. Okay, so here we've got here a plot with the trend. Here's my target right down here, and look at this here, it's hit within 1 or 2 ticks. Let's now take this point there to there. Here's my point right up here, and let's take this one here to here. So it's telling me to target down to here, this one here, it's telling me to target here, there to there. It's telling me to target right down here. Looking good. I think it's going to have a lot of potential here, because let me reassure you, how it is plotting now is exactly how it plots in real time. So unlike a lot of indicators that replot, and even with Roy's cycle indicator, which disappears, okay, it's very different to that. Now let's just have a look at this here. We've got a market extreme, so we've got angulation, pull down. Now normally as a scalper you might be, and by the way, this is also giving me my risk reward ratios. So as a scalper here, this is if we would look over here, it's not here at the moment, it plays up a little bit, it disables a couple of other functions when I plot, but this would be almost certainly a T3 on our 610, and normally you go for a 2 to 1, but here it's going to give you an even better risk reward. So let me turn it off now, traders. But I just wanted to, because I've and please, I know a lot of you want to be kept up to date with my research. If you do, just drop me an email. I've already got probably 40 or 50 of you have already dropped an email to me about this. It's still trial. We've now been trialing in real time, and by the way, we're also applying it to ES and to the NQ, and we will expand it to the, let me get this right, to the Forex markets as well. A couple of other things is we've got another, I'll be announcing his name next week. It is, by the way, Sunday Down Under. It's the 4th of December. So we've got one coach on board, and I'll be announcing his details once his agreement's all signed up, getting ready for our launch of our rooms in January. So there's lots happening, and I've got other interviews going on. So look, there's a lot happening. But anyway, let's get back to this chart. So once again, we're looking at here at the 230 CL. 610 is our middle market, and let me now pull my pointer on, and let me also do one thing. I want to go to global. Okay, I'm just going to put this on hold for a moment. Okay, so now we're working, traders. So this is what I'd like you to think about, is scalping when you've got a T1. Now with your T1 signals, let's just go back to a slide here where I want to talk about this. Where are we here? Here we go. So because CL can move so quickly, what you want is an early heads up of a potential T1, or if you're trading a T2 or whatever. So you might want to type this out or print this out. Well, it's a bit hard for you to print it out, but type it up, put it down. So an early heads up of potential T1. Be watching, waiting for a 3 to 5 candle pullback, because for a T1 to plot, for those of you that have got the indicator, okay, you know you've got a 3 to 5 candle minimum pullback. So be watching for that, a pullback to your 2134 ideally, then a reversal back and close over the 8 EMA. So you're looking for a 3 to 5 candle pullback, and even if you get a T1 plot under the 8 EMA, which is rare, that is, it's rare that you're not already over the 8 EMA unless you've got a severe T3. You're waiting for a close back over the 8 EMA, which is what I always recommend. So if you get a 3 to 5 candle pullback, you'll usually get a T1 setting up, a T2, T25, or a 34B. Of course, you might get if you're getting an 89B, it's usually many more candles than 3 to 5. So what you also want to be looking for is, of course, is 2Bs and 3Bs. That is, on your anchor chart, if you've got say a 34B on your entry chart, you've got a 21B on your anchor. If you've got, say, an 89B on your entry chart, you've usually got a 34B on your anchor. They're what we call 2Bs. They're a very good trade. But because CL can really take off, and you tend to find that a lot of traders, when they get 2 candles closing in the direction of the 34, you'll see more often than not the CL really taking off. So this is where you want to really train yourself to be watching for those pullbacks, 1 to 2 candles closing, and be ready that you're either going to get a T1 plot or the market may really move. So just be ready for that. Hopefully what I've just explained really makes sense. Just on stops, I just want to mention this is that on the 233 we tend to be finding that earlier in the trend you're really 10 ticks as far as a target. 11 ticks is really realistic. So in that particular case, if you want to tuck your stop under a pivot high or low, many of your stops are going to be 8 to 10 ticks. Now mathematically, because if you go back and do your numbers, it's a very high probability trade, your T1s and your T2s in the direction when you're trading with the 34, particularly if your entry is closer to your 21 and 34 EMAs. Now remember, the further your entry is away from the 21 and 34 EMAs, the more likely you are for a pullback. So you want to be very quick on the trigger. You want to be ready to pull your stop up or to exit from the market. Okay, so just remember that if you've got an entry close to the 21 and the 34, you've got more room to move, if you like. Now what you can actually then do is scalp 5, as many of our oil traders are scalping 4 to 5 6 ticks. Okay, and what you may choose to do, and this is really more of an advanced technique, is to then on your second lot of contracts go for 8 to 11 ticks. Now if you've got a 10 tick stop, of course your risk reward is way out. You really need to be winning a high percentage of your trades. But what you can do is, if say for an example you've got a stop of 10 ticks, you scalp 5 off, you bring your stop right up to maybe 1 or 2 ticks negative on your second contract. Okay, so if you're going for a higher profit target, your risk is much lower, right? And target 10 to 11 ticks if not more on your second contract. And advanced technique is to use your 8 EMA for exits, or a 2 candle, that is to be below, say if you've got green candles, to have your stop tucked in 2 candles below the low. You get a third candle, your stop, you're moving your stop up to the candle 2 candles below that. Now the reason I say it's advanced, it's very easy to sit here and say this is what you should be doing, traders, but doing it when you're in the green, dragging up your stop, it is an advanced technique. You've also got to mentally be there. Okay, so traders, I think the experienced traders know what I mean. It is an advanced technique when you're trailing your stop rather than just scalping. Now let's go back to the charts here. So you can see here we've got your T1, your T1, your T1. Now if you go and do your research, okay, and this is a point I want to bring up about divergence here. You can see here you've got divergence here on the platinum, and you'll get divergence on just about you could have RSI. There's multiple momentum indicators, of course, you can have divergence on, and you see it only tick back 4 or 5 ticks, and then it turned into a 34B. And this is where traders, if you're trading for divergence, you'll see, particularly in the peak trading times, you're more likely to be chopped up on divergence trade because you'll get long trends. And you can see this is virtually a channel where when you get angulation, price action moving right away, like with a T3 or a T89, you're more likely to get a decent pullback. So you just want to be very cautious. So what I've done is just quickly marked up a few trades. This is our first T9. You can see here we've gone up, we've pulled back, you've gone back up, and your T1 has formed. Now coincidentally on the next candle that also is a T10. Just as a reminder, what is the difference between a T9 and a T10? A T9 is where I definitely have the white paint bar appear. It makes it a very mechanical approach. That is, rather than just relying on the short-term stochastic down here, which sometimes can be wishy-washy, I'm looking for every white paint bar where it's a lower high or a higher low. Okay, so there's a really nice trade. Now with your T9s, more often than not you're going to get 10 to 20 ticks on those. Just do your stats, you'll see they work really well. So T9, your double bottom. You've got remember, traders, when you get a double bottom against your 200, they're a great trade to take. There's divergence. If your stop was 2 ticks down tucked under here, you're safe on both of those. Went up, bounced for your 34B. Moving along. Now, by the way, you can see the time here. This is late evening, very early morning, New York time. So we've got lower high here for a nice T9. Come back down. You've got your 34B, your 34B. You've got T2s, so you've got lots of action. But this is what I mean about these channels. If you were taking these counter trend trades, you can see here, unless you're just scalping for a couple of ticks, you can see you'd be stopped on these. This is where you've got to really watch it. Coming down here, and this is the very next T9 trade, which if we mark this up here, we can see on the next candle it actually is also a T10. Okay, but once again, what makes it very definite for me is I've got the white paint bar. It appears. Let's move along here. Okay, moving along, next T1, you can just see the T1s we've got here, 34Bs, 34Bs, and of course I haven't been referring here, but if you look over at your anchor chart, you can see it there. We've got 34B on the anchor chart, and on the highest time frame we've got a 21B. Move along, 34B, here's another T7. That was a nice little winner. Sorry, T9, my apologies. Now what I've now done here is marked up, this is the next, we've got a lower high, this is now a higher low. Okay, and we're now 545. This is what I call, and you'll see me quite often mark these up, also a double top, so I call them big picture trades. You can see here we've had a fair bit of movement, but it's still a definite higher lower high, I should say, compared to here. And if you look over here, you can see on our anchor chart we've also got a T1 setting up. Now, as a reminder, traders, remember this is applicable to all markets, all time frames. So here we've come down, we've got an 89B, and if we look over here on our anchor chart, what have we got? We've got a 34B. Here you can see here we've got a lower high trending in the direction. You can see here you've got a T1 on your anchor chart. Now what you may actually do, I like to look at a much larger area, trader. So of course you're going to be on your far right here, and so if you have multiple trade or multiple screens, of course you'd have maybe your anchor chart and the third time frame above this as an example. So moving along here, you can see here we've got T9 again, and here that bounces right on, and be very cautious, of course, when you're coming down here, these bounces on your 200. Traders, also remember trading against a divergence trade. So you can see here you've got a lower low and you've got divergence. Be very cautious in the first trade after these. You'll see these, and you've heard me talk about this many times, these fail time and time again. They're just a high risk trade. Now the point I wanted to bring out here is on the 233, if you were just scalping, okay, market orders, and by the way, this is here, this is 7:21 Eastern time, this is 8 a.m. Eastern time. Very hard to put unless you're putting a limit order in. You know, if you're going for a market order, as most of the CL traders that are with us are doing, you can see the potential there in scalping your 6 to 10 ticks, particularly where you got a T1. Now here the low of that one there was sorry, that was 36. We stopped on this one, low of 35, so 2 ticks below there you were still in it, easily 10 ticks. So you can see here achieving 10 ticks on a lot of these trades is very achievable. You got 10 there, you got another 10. Look at these trends. Now you'll see this consistently with oil. Now the other thing is, though, for your divergence traders, look at this here, you would have been smashed. Look at this, this is in a channel all the way up. This is where there's no angulation, and you've just got to be very cautious in trading these. Okay, look at these trades here. All right, now you've got finally we get another T9 here, nice little trade. And once again, if you look down here, you actually have right there. You've got a T10 setting up right there, which would have been a winner, and then you've got your T9. Remember, the difference is with the T9, I'm not referring to the stochastic. I'm simply looking for the market's got to move down and then a pullback, then a trend continuation back in the direction of the 34. Winner, winner. Nice little pullback, winner again. So traders, I think you get the hint here. Then we hit some chop once again. What do we got? T9 there. You've got another T9 here. You've got had a double bottom there. Now I call these flat tops, flat bottoms. The problem on a 233 tick chart is quite often is these are moving that quickly, and if this is over a 3-minute period is where you start to see these these T7s. They work really well. Now here, this is another example, and I'll just finish this video off here. Let me just pull this up for you. Let me just turn this off, and let's just see how we would have gone with the TradeMaster. Make sure I'm on here, and then we'll close off on this video. So you can see these dots. Now these are cycle turning points. These plot very late. So traders, where you look at these and think, beauty, I'll just follow these. Well, these are don't plot till quite often a fair way along. So they're not tradable in their own right. But what is working really well is where I apply Roy's indicators. Roy's indicator for TradeMaster, he calls it TradeMaster 2, is when we have a T1 plot. So here it is telling me that I should be targeting here. This one here is telling me I should be targeting there. If I take this point up here as an extreme, down here as an extreme, anyway, I think we pretty much covered this earlier on. So in finishing, be very careful of your divergence trades unless you get a real extreme. And let me turn the TradeMaster off, because what I want to show you again, sorry, I'm gonna just have to quickly turn something else off here, is, let me turn this off, is angulation. Okay, you can see here that angle, that wedge format that you're getting. All right, if you're going to take divergence trades or T3s, and let's just go and have a look at that. It's probably almost certainly a T3, which it is. Look at the anchor chart. See how price action is gapped right away from the 8. When you see those, it makes it a much more tradable, or a much more high probability trade. And notice here I've got no divergence, but what I've got is a rapid gapping away, and the market flies away here. Was there anything else on this chart? Okay, another big picture T7 double top. Now if you go and look at this here on your anchor chart, you can see here, and remember traders, I work on a double top double bottom. If it's within a couple of ticks, it's a double bottom double top to me, and there it is there. Now here you can see here we've got an 89B, and basically it's a 34B. Once again, one of these 2Bs where you've got 2 EMAs bouncing, notice there, and then almost a 34B on my time frame, my third highest time frame. So let me quickly look at my notes here. So traders, we're still, look how many T1s we've had here. Now I think on this day there was about 800,000 or 900,000. That's right, this was of course we saw the OPEC meeting this week. You want to be very cautious in trading during the OPEC day, and of course Wednesday mornings we see the crude inventories coming out 10:30 Eastern Standard Time, so the market's quite violent there, so you want to be very cautious, wait for it to settle down. So but basically these patterns you see here appear every day. And if we go to Friday's action, where I think there was about 800,000 contracts traded on that day, here it is here, the same patterns appear. Okay, you can take virtually any day, you'll see these 34Bs. So for scalpers, and that was a 200B, if you look over here on your anchor chart, it's a great market. So I'll wrap this one up, and once again, go back, do your testing on your market of preference. If, as I say to every trader, if you're already doing really well on the NQ, stick with the NQ, but have a look at this as a potential market. If something is working really well, have the mindset to say, okay, what Ray is showing me, how can I apply that to what I'm already doing? Don't stop what you're doing if it's already working. Remember, and I remind myself now every day of this, be careful of what I call the shiny object syndrome. something that looks better than what you're already doing. All right, so just got to be very cautious. Okay, traders, I'm going to be doing a Q&A session almost certainly tomorrow or Tuesday. And I know I always run 2 or 3 days late usually on these, but we will get there. And good news about the room, it's looking great. And keep those testimonials coming. I really love to see those great results that some of you are achieving. It's really inspiring. Thank you, traders. I'll see you on the next recording.